Good afternoon, everyone. I'm glad to see everyone here. So today, me and my colleague Michael, we are all going to discuss the ADP report out of the United States, which is closely watched by market participants and investors all around the world. Let me bring my slides to the whiteboard and my notes. Today's release will be widely read as an early clue for Friday's more comprehensive official data on the US labor market. Recent economic data out of the world's largest economy has been mixed, which has prompted some analysts to warn that the U.S. business cycle risk is on the rise. This week's employment data for October offers a key update for deciding if the macro trend will weaken further in the first quarter or not. Just a second. No. Okay. Today the ADP report is expected to show a slight decline from 200K in September to roughly 180K last month. This would be considerably below the 12-month average, which is now around 212K. Meanwhile, Friday's widely expected report on Friday is expected to deliver a substantially stronger gain in October versus September's steepest increase. So now we see that on Friday, economists expect the economy to create 179,000 jobs compared to 142,000 jobs in September. So now let's have a look at the Bloomberg survey details. So from the table over here, you can see that the highest estimate was 230,000 jobs, while the lowest was 140K. So in some 7 minutes or so, we will find out whether the actual data will be within this expected range. So as to our community members and their expectations, you can see here that the slight majority expect that the data will have a bearish impact on the dollar-yen currency pair. Yes. And as usual, I like to choose one of the comments from other community members' comments. This time I have chosen Helena Expert's comment on the data. So it appears to be quite popular as it has 6 likes. So yeah, if you want to read it, just double click it and it will be zoomed out. So now I guess it's time for us to discuss some options how to trade on this news, and for this purpose I would like to invite my colleague Michael to the whiteboard, and I'm heading to our Bloomberg terminal to find out what is the actual data. So see you soon.
Thank you, Eugenia. Hello, everyone. So for those who have been present on the date release of the UK Services PMI, you know the drill. But for those who have just joined, I'll just have to go through all of this stuff all over again. So for the given date release, we have the negative strike price trading strategy with the euro-dollar currency pair. And of course we have the buy market, since we're expecting the US dollar to decline and thus strengthen the euro-dollar pair. The market sentiment for the given pair is bullish at 52.57%, with the euro being bought in 51.65% of all cases, and the US dollar being sold in 54.59% of all cases, all in the majority. Concerning the pending orders, they are quite similar in the 50 and the 100 pip ranges. In the 50, it's 53.36% of all orders to purchase the euro, and in the 100 pip range, it's 53.26% also to purchase the European currency. Other market participants are mostly bullish on the euro-dollar, with Orlando having 52.95% of all positions being long, and Daily FX has 53% of traders holding long positions. However, the Saxo group is bearish, with 54.40% of traders holding short positions. So if we move to the market reaction table for the USADP employment change, for the euro-dollar, the largest reaction was 55 pips, and the smallest one was only 10 pips in the previous month. So based on these reactions, I'll try to boost my mic. Hopefully you can hear me now. So the approximate average reaction we could expect today is exactly 24 pips based on these reactions, and we use this average reaction to set the take profit and stop loss levels accordingly, with the take profit level currently located at 1.0955, and unfortunately there are no other significant levels that could bolster this resistance. However, we do have the trend line similar with as it has been with the cable today. This resistance has been there for more than a day, so that is a level to consider, which could prevent the euro-dollar from rising today. And the stop loss level is located at 1.0907, as far as I remember. Yeah, well, there are some supports close by, the 4-hour S1 and the daily S1, so those could help the pair to stop the losses around that area as well. But nonetheless, the outlook is bullish, so there's a good chance that this resistance is going to be pierced. And since we have like a minute left, I'm just going to mention the technical indicators, which are giving us bullish signals in the 10-minute time frame, bearish in the 30-hourly and the daily one, distinctly bullish in the monthly one, and the 4-hour one, mixed signals in the weekly one. But as usual, the most important indicator is the 30-minute time frame indicator, since it was updated specifically for the given date release 30 minutes ago, and it's actually giving us bearish signals, so contradicting with the strategy, suggesting that the negative surprise trading strategy, so suggesting that the pair could go actually to the downside, and thus preserve the bearish trend today. So, and we have approximately 15 minutes left. I'll quickly say that other market participants, other surveys expect the non-farm payrolls to rise to 190,000, up 10,000 more than the forecast. So we actually do see a decline in the given pair. The reaction is only 5 pips, since the data is slightly better than anticipated. Yeah, it's actually 7 pips now, only 2,000 more than expected. That's the main reason why we have such a small reaction, but nonetheless the bearish trend was preserved, and we see a decline in the euro dollar. So this time we were not so successful in predicting the exchange rate. So that would be all from my side, and back to you, Eugenia.
Thank you, Michael, so very much, and thank you everyone who has been with us today during these data releases. So we wish you a nice rest of the day. Enjoy your evening, afternoon, morning, wherever you are, and take care, and we wish you a successful trading as well. Bye-bye.
Hi guys, I'm going to be continuing on the webinar on the dollar Canadian. So let's start. Let's go on my screen and let's take a look at what's going on with dollar Canadian. There's still some more economic data, a lot of more economic data inbound. There will be dollar trade balance, and there will be Canadian trade balance, and we can take a look at a chart, and I'm going to load